Welcome and thank you for joining me. In the last video, we talked about the general rules surrounding Pennsylvania inheritance tax. And in this video, we're going to talk about the exceptions or the exemptions to tax. So just a quick summary: anything passing by reason of death, including any gifts that were made within 1 year preceding death, are generally subject to Pennsylvania inheritance tax, and the tax rates vary depending upon the relationship between the decedent and the beneficiary. So in this episode, in this video, we're going to talk about the exceptions to that general rule. So this is the good stuff. These are the items, the assets, or the transfers that are exempt from inheritance tax. The first one that we're going to address is the biggest one, and it's the easiest to understand. It's the spousal deduction or the marital deduction. Anything passing to a surviving spouse is exempt from tax. Some people say that it is subject to tax at a 0% rate, but either way, anything passing to a surviving spouse does so completely free of tax, and this is an unlimited deduction. One thing that's worth mentioning here is that this rule does not apply to domestic partners. And this is something that people should be aware of. Not that I would ever advocate for marriage for the sole purpose of avoiding tax, but the implication in Pennsylvania is a big one. So for domestic partners, people who may cohabitate, they may share living expenses, they may have a relationship that is fundamentally the equivalent of a marriage, but they've just never solidified their union through law. And so they are treated as an unmarried couple for tax purposes. And in Pennsylvania, this matters a lot because an unrelated individual is subject to 15% tax, whereas a married surviving spouse receives the complete marital deduction. So the difference in tax is 15%, and you can use basic math to determine how significant that can be. On $100,000, that's $15,000. On $1 million, it's $150,000 in tax. So this is something to be aware of. There is a very specific exception to that rule, which is that in Pennsylvania in 2005, the legislature abolished common law marriage. So if you can establish that a common law marriage existed prior to 2015, because the rule does not apply retroactively, you can still claim the exemption, but this is becoming difficult. And obviously, as time passes on, eventually that rule will phase out. The next one that's worth mentioning, because it differs from federal law, are any gifts that are made outside of that 1 year window that we talked about. So again, any gifts that are made within 1 year of the date of death are subject to tax. And the reason this rule exists is to prevent people from giving all of their property away on their deathbed. But any gift made outside or before that 1 year window is completely free of tax. This is an unlimited amount. So any gift made during your lifetime outside of that 1 year window is exempt from tax. The next notable exemption is life insurance. Life insurance proceeds are not subject to Pennsylvania inheritance tax. And this is another exemption that differs from the federal law. Under federal law, life insurance proceeds are subject to estate tax. Now, again, there's a massive exemption, which we will talk about in the next video, where we get into federal gift and estate tax. But for the purposes of this video, life insurance proceeds are exempt from Pennsylvania inheritance tax. Another notable exemption is the family exemption. This is a $3,500 exemption that is available to family members who were living with the decedent and providing care for them up until the point of passing. This was a rule that was enacted by the Pennsylvania legislature that essentially allows the executor to make a distribution of that $3,500 amount to the family member, and then is an exemption against Pennsylvania inheritance tax. The last two exemptions that I'm going to cover, while less common, can be significant. The first one is farmland, agricultural use land, agricultural reserve land, and forest reserve land. The rules surrounding these exemptions are very complicated, and it is extremely important that if you're going to claim the exemption, that you look at these rules very carefully. The last exemption that I'll mention is an IRA if the decedent was 59 and a half or younger at the time of their passing. So this comes up when someone has an untimely death under the age of 59 and a half and they have an IRA. The proceeds, the assets in the IRA are completely exempt from Pennsylvania inheritance tax. Before we conclude, there's a lot of confusion surrounding this issue of what assets are or are not subject to Pennsylvania inheritance tax. And there's two in particular that I hear often. So just to clear this up, a lot of people think that probate assets are subject to tax and non-probate assets are not subject to tax. That is not true. It's not the right way to think about it. Just because an asset avoids probate does not mean that it avoids Pennsylvania inheritance tax. Non-probate assets are subject to Pennsylvania inheritance tax unless they meet one of those exemptions, which we already talked about, including life insurance and an IRA if the decedent is under the age of 59 and a half. This also includes revocable trusts. A lot of people think because revocable trusts avoid probate, that means that you can avoid the inheritance tax. Again, this is not true. Any asset that passes in a revocable trust is subject to Pennsylvania inheritance tax unless it meets one of those exemptions that we talked about earlier. So I hope that you find this information helpful. If you like this content, please let me know, and I'll look forward to seeing you in the next episode.